Welcome back to Investing Talk podcast. Today we're looking at a bunch of sources that a listener sent over. They're asking, well, the big question, is Ondas Holdings a good time to buy now? So we're going to use this material to try and synthesize, the biggest risks, figure out what their competitive edge really is, and flag the critical dates coming up for this defense and autonomous systems company. They seem to be moving really fast. Before we jump right into the analysis, just a reminder, if you want us to look into a specific company next time, make sure to subscribe, like, and definitely leave a comment below. Seriously, your requests really do drive what we cover here.
Yeah, and what's really fascinating with Ondas is they're operating right at the intersection of two super hot sectors, right? You've got mission-critical wireless networks like private ones, and then these high-end autonomous drones. What the sources show is a company that's clearly shifting gears. It looks like they're moving out of a pure development phase and really stepping into a high-growth, maybe high-risk capital deployment phase. It's a big step up in how they operate.
Okay, so let's unpack that recent history a bit. It feels like the last 3 months really set the stage for what's next, and it seems it's all about cash, about liquidity. They didn't just raise some money. It feels like they basically gave themselves the fuel needed for a major, major expansion push.
Absolutely. The main event was that big financial move back in October 2025. Ondas, they successfully priced and closed this pretty massive $425 million underwritten offering. And it wasn't just stock, right? It was common stock and warrants. That kind of money for a company with their previous size and, frankly, their revenue numbers, that's transformative. It's a real war chest.
Okay, hold on. Let's pause on that common stock and warrants bit for a second. Especially if you're learning, you might just gloss over that. What does that specific structure tell us? Why warrants?
Right, good point. That structure, it's actually a crucial signal. So selling common stock, that's standard, right? But including warrants, well, a warrant basically gives the buyer the option, the right, to buy more stock later on, but at a price that's fixed today. By doing that, the company is essentially broadcasting confidence. They're telling the market, we believe our stock price is going way up.
Yeah.
It's definitely an aggressive, growth-focused way to raise money. And yeah, that capital is the foundation for their strategy, partnerships, and really importantly, potential acquisitions.
And it seems like they didn't waste any time putting that strategy into motion, particularly on the defense side. That seems like a huge ongoing tailwind for their autonomous systems unit. Yeah.
Correct. Yeah, they moved fast to kind of bolster their military tech development side. They expanded an existing partnership with a company called Rift Dynamics and brought in Nammo, the Norwegian defense contractor. The specific goal there is integrating this thing called the Wasp munition drone, targeting the U.S. defense market. So yeah, that move, it really cements their focus on military-grade autonomous systems and, chasing those defense contracts.
Okay, and here's where the story gets kind of interesting for investors trying to time things. The sources, they highlight this buzz, this anticipation back in September, so right before they actually got the cash about where that money might go.
Exactly. Even before the $425 million was officially, in the bank account, the market chatter was already focused on M&A, on the acquisition pipeline. Management was clearly signaling, hey, we're about to go into an expansion phase. And the speculation was around strategic kind of bolt-on deals, specifically in robotics and wireless networking. It paints a picture, doesn't it? First, maybe they spent a year or so building the core tech, then the market showed there was demand, and now, bam, they've got this massive war chest to scale up fast, potentially through buying other companies. We're really looking at like phase 3 of their story here, the scaling phase.
Okay, so they got the money, the strategy is funded, but, before we look too far ahead, we have to look at the numbers they're starting from. Let's pivot to the financials. If you're just learning and you look at the top line, those revenue figures might look a bit, jarring compared to how the market seems to value them right now. What did the fundamentals actually tell us about where they stand today?
Well, the numbers, they really do reflect that high-risk pivot we were just talking about. This isn't a company showing nice, steady, predictable growth. Not at all. For instance, 2024 revenue was only $7.19 million. And that was actually down, significantly down, 54% year over year compared to the year before.
Whoa, okay, the 54% year-over-year revenue drop, that's huge, even if you're pivoting.
Yeah.
Was that expected, or does that maybe signal something went wrong? Like, did they sell off a business line, or were contracts just pushed out?
The sources seem to suggest this volatility is more a symptom of these aggressive strategic shifts. It's mainly driven by really intentional massive spending on R&D and potentially some strategic delays in contracts as they maybe waited for the next gen tech to be ready and the bigger contracts that might follow. And when you look at profitability, well, the picture gets even starker.
Let's talk about that picture then. Profit margins are deeply negative. The net margin is sitting around, what, negative 298.6%. Now, you rate this a strong buy, but a beginner investor sees a number like minus 300% margin and probably runs screaming. Why should someone look past that? I mean, losing nearly $3 for every dollar in revenue.
You absolutely cannot look at that number in isolation, you're right. But that figure, it's actually typical, almost expected, for a tech company that's in this scaling phase, aggressively just pouring cash into R&D, into infrastructure, trying to build completely new solutions. They're essentially using today's capital to buy future market share and technological leadership. They're spending now to develop, cutting-edge AI drone solutions, proprietary mission-critical wireless networks, stuff that, if it works out, could generate huge high-margin revenue down the road. So the loss reflects investment, not necessarily just operational failure.
Okay, that frames the losses as strategic supporting future growth. But, I mean, strategy alone doesn't pay the bills forever. How solid is the balance sheet that's backing this, let's face it, inherently high level of risk?
Right, and that's where the picture looks more resilient. Is probably why analysts are still bullish despite those losses. The financial strength, particularly after that big capital raise, is actually quite good. The latest metrics show total assets around $152 million versus liabilities of about $39 million. They have, moderate debt, strong asset coverage. It gives them flexibility to manage that negative free cash flow, which is currently running around negative $8.5 million. So the balance sheet looks strong enough to sort of weather this execution risk for the next few quarters while they try to build the business up.
Okay, so the strong balance sheet does offset some of that short-term revenue weirdness. But what's the ultimate reason analysts are rating this a strong buy? What's the actual competitive moat they're digging here?
The moat, it really seems built on their unique structure, these two segments, Ondas networks and autonomous systems. And it's not just, two separate businesses sharing office space. It seems like there's a real symbiotic relationship there.
Okay, let's start with networks. You mentioned industrial-grade connectivity, this FullMax SDR broadband platform. That sounds technical. Can you unpack that? What is FullMax SDR and why is it supposedly so dominant?
Right. FullMax is based on software-defined radio,
Right.
or SDR. Think of it like this. It lets them build custom, private, highly secure broadband networks. These aren't for consumers, right? They're specifically tailored for railroads, utility grids, energy companies. It's mission-critical, dedicated connectivity, often operating on licensed spectrum, which is key. And the software-defined part means they can upgrade capabilities mostly through software updates, avoiding costly hardware replacements. So this very specific niche, secure, reliable, scalable private broadband for critical infrastructure, that's where they seem to have carved out a dominant position, particularly in utilities and transportation.
Okay. That sounds like it could be a very long-term, sticky source of revenue if they execute. Now, what about the other side? The innovation front, autonomous systems. How do the drones connect back to the networks part?
That's the synergy, right? On the autonomous side, the AI-powered Optimus drone gets mentioned as a key innovation. This tech is aimed at capturing new areas like security, specialized mapping, monitoring services. But the real insight, the potential cross-pollination, is this. They're building the proprietary wireless tracks that's Ondas networks for the exact same kinds of critical infrastructure clients who are likely buyers for their inspection drones, monitoring drones, security drones that's Ondas autonomous systems. They're potentially creating this kind of closed ecosystem where they own both the communication backbone and the devices running on it. That diversification and that potential synergy, that probably explains a lot of the bullish analyst sentiment, even with the current financials looking the way they do.
Okay, that high-risk, high-reward model is definitely clearer now. So let's talk timing. The listener wants to know about when to act, potentially. And it sounds like the next 3 months are just packed with potential volatility triggers. What are the absolute must-watch dates that investors should circle on their calendars?
Well, the most immediate one, operationally, is the Q3 2025 earnings release. The sources seem pretty firm on October 24th, although, we should probably note some analysis points maybe to November 11th. Either way, that earnings call is going to be huge. Investors will be laser-focused not just on the loss numbers, but on what management says about how that $425 million is being put to work. And crucially, are those defense contracts, those new partnerships, are they actually starting to show up as real revenue or at least substantial pipeline growth?
Yeah.
That's key.
Right, the proof is in the pudding there. And beyond earnings, the sources also highlight a couple of key catalysts that are more structural, external to the company itself, but could still drive demand for the stock.
That's right. Two big ones. First, there's potential ETF inclusion around November 2025. If Ondas gets added to some of these new robotics or AI thematic exchange-traded funds, well, that can drive automatic buying. Those funds have to buy the shares to meet their mandate, right? It's not just based on fundamentals. So that can create incremental demand and definitely improve liquidity for the stock.
Okay, that makes sense. What's the second one?
The second is the institutional holdings disclosure, likely around December 2025. These filings will reveal if any big players, any whale funds, took a substantial position after that massive capital raise in October. Getting that institutional validation, seeing that the so-called smart money jumped in, that's critical. It can generate a whole new wave of market coverage and really validates the aggressive growth strategy they're pursuing.
Okay, and then there are more speculative triggers. It sounds like the rumor mill around this stock is working overtime, especially tied to defense deals.
It really is. The sources mention these ongoing, apparently strong rumors that Ondas Holdings is a finalist for a pretty significant U.S. defense prime contract. And the timing, possibly announced before the end of the year. Obviously, a win like that would be transformative. It would immediately start to materialize the revenue potential from that WASP munition drone integration we talked about. And there's also still high speculation about them accelerating the M&A pipeline, maybe near-term announcements for some of those bolt-on deals.
Gotcha. Let's quickly touch on the technical picture for someone maybe thinking about trading around these catalysts. We need to understand the risk baked into the stock's movement itself.
Oh, absolutely. The stock is definitely volatile, no question. This is reflected in its beta, which is high, at 2.07. Just for context, a beta of 1 means a stock moves roughly in line with the market, like the S&P 500. A beta of 2.07 means, theoretically, if the market moves 1%, Ondas might move 2.07% up or down. So you're signing up for potentially big swings here. However, the current technical trend is bullish. It's trading above both its 50-day and 200-day moving averages. Looks like it had a recent breakout.
And analyst sentiment.
It's incredibly strong, actually. 75% of analysts covering it rate the stock a strong buy. The consensus price target suggests potential upside anywhere from, say, 25% to maybe 46% from recent lows. Forecast models seem to predict a trading range, maybe $7 to $12 in the coming months. So analysts clearly believe there's significant room to run if the company executes.
Okay, so bringing it all together then, back to the original question, is Ondas Holdings a good time to buy now?
Based purely on the material we've reviewed, the overall investment thesis leans bullish.
Yeah.
I'd rate it maybe an 8 out of 10 based on these sources. The rationale really centers on that combination. Strong long-term fundamentals, supposedly driven by AI and this mission-critical wireless innovation, coupled with multiple short-term catalysts over the next few months that could really drive volatility and potentially re-rate the stock quickly. So it appears potentially attractive, maybe for both short-term traders playing the news flow, especially those defense rumors, and also for long-term investors who are targeting that kind of disruptive growth in defense and critical infrastructure.
Okay, but let me push back on that 8 out of 10 rating a bit. We've established it's super volatile, right? Their revenue just dropped 54% year over year, and they're burning cash like crazy with a nearly 300% margin. Aren't we just kind of praising management for successfully raising a boatload of money? What specific evidence in these sources shows they can actually execute on delivering the growth they've promised, not just talk about the plan?
That is absolutely the essential caveat. You've hit the nail on the head. The critical risk you have to monitor is precisely that: execution risk. They've got the capital now, yes. They seem to have the partnerships lined up. They arguably have a technology mode starting to form. But those ongoing net losses, that negative cash flow, it means they're operating on borrowed time, in a sense. They are entirely reliant on future revenue materializing, and soon. They absolutely must deliver on that promised revenue growth, on those contract fulfillments, to justify the kind of substantial upside analysts are predicting. The market is clearly betting heavily on future delivery. And if that October 24th earnings report doesn't show significant pipeline momentum, or maybe even some early wins, yeah, that 8 out of 10 confidence level could erode very quickly.
Okay, so this really raises a crucial question for you, the listener, to think about. Given that high volatility and the fact that analysts are already predicting a price range maybe up to $12, how much of that future growth, those potential contract wins and acquisitions, is already baked into the current stock price? And maybe more importantly, what kind of specific, maybe blockbuster news, either a huge contract announcement or stunning earnings figures on October 24th, would actually be needed to justify that kind of substantial upside from where it's trading? happening right now. Something to chew on. Well, thank you for sharing your sources with us. We'll definitely be keeping a close eye on those catalyst dates, especially any news on how that $425 million is being deployed and those institutional filings come December. We'll catch you next time.